Alright, what is up you guys? I just wanted to make a video on how to trade options on Fidelity. This screen looks a little complicated at first, but it's actually pretty straightforward if you know what you're doing. I'm guessing all of the legacy brokerages will have a similar screen, so TD, Ameritrade, and Schwab. They'll basically require you to understand the same things, and they'll look more or less the same. As opposed to Robinhood, which is about as simple as you can get, maybe overly so in my opinion. But anyway, okay, so let's hit trade here, and I'm going to blur out my account numbers and that sort of thing so you can hit options. I'll show the multi-leg options in a minute. So here's kind of the base screen that it will show you. So it looks like a lot of information, but you just take it one step at a time. This is kind of annoying and isn't a very good feature, I guess. I'd prefer to see an options chain and go from there, which you can do, but this is the main screen, so this is what I'm going to show you. Okay, so say we're going to sell a cash secured put on 3D systems. So type in the symbol, calls and puts, and it kind of has all these things which you can do. Anyway, I'm just going to stay on calls and puts because I'm not selling a spread or anything. And I'm opening a position, so it's going to be either a buy to open or a sell to open, and I'm selling a cash secured put, so I'm going to click sell to open. And obviously if I want to close this position at the end, I'm going to take the exact opposite position. So when I sell to open this today, say in a week I decide I want to end this contract, buy back, so I would click buy to close. Okay, so if you buy to open a contract, then you sell to close it when you want to close it. Okay, so just take the exact opposite position. So sell to open, I'm just going to do one of them. I'll pick my expiration. I'll say for this Friday. Strike price doesn't really matter, so it's going to populate all of the possible ones. Let's just say I'm going to sell the 25 strike put, and then it'll show me kind of where the bid and the ask is. I can set what order type I want. I always do limit orders for options. It's kind of personal preference. Looks like the liquidity is fine. The bid ask is pretty narrow, so I'd probably get a fine fill. But this is just what I always do. I set the limit price for right at the mid, which I'm happy with, and then let it auto, and then I can hit place order, and it would send it through. Okay, so there is that. Okay, so now let's do a long call. Let's say I want to buy a long call. We'll do the same thing on 3D systems. So same calls and puts. This time I'm going to buy to open, and I would sell to close when I want to close this. We'll just one contract. Same thing, we'll do it for this Friday. We'll do slightly out of the money. Set that for call. Order type, limit. Same thing, liquidity is fine, but I always do this. Limit price 0.7, and then I can hit place order. Okay, so pretty straightforward. You gotta understand a couple things in here, but you just take it one step at a time and figure it out. Okay, so let's try a multi-leg now and see what that looks like. It looks pretty intimidating at first. It takes you to a new screen, but same thing. Just take it one step at a time. You'll figure it out. So here's your strategy, whatever you want to do. For the most part, you'll do spread. So let's say we want to get into a call debit spread, just a nice basic one. So leg one, I'm going to do a buy to open, and do one of those. And let's just do it for this Friday. And let's do a $27 strike, call, and then it's a debit spread. So this one is going to be a sell to open. Okay. One, again for this Friday. We'll pick a higher strike. We'll just do $27.50. And it's going to show you what the midpoint is for those two. Anyway, like I said, this screen isn't super attractive. It kind of makes it a little bit obnoxious, but you can see here it automatically puts in that it's a net debit since you're paying more than you're receiving for the amount there. And then same thing, you don't really have to change anything. So it'll show you the last trades for both those calls, the bid and the ask there. So you can see you could probably get a better fill, maybe 20 cents, maybe 15 cents. Like I said, I don't love this screen. It does show you your P&L and that sort of thing. So your max loss, since it's a debit, is the amount that you put out, and the max gain is the difference between the two strikes and the premium you paid. So at least it's nice in showing you that. And it also shows you your break even, 27.20. Okay, so that is how to trade options on Fidelity. Like I said, most of the other brokerages will probably look very similar to this. Just you got to understand the buy to open, sell to open. They're pretty straightforward once you do it once or twice, and then kind of figure out the bid and the ask. Make sure the liquidity is there and you're not over spending for these trades. Their commissions are 65 cents. Don't quote me on that. I think they're 65 cents per contract on Fidelity. I don't know for the other ones. I think TD Ameritrade is free. I don't know for the rest, so I'm not going to say anything. Don't quote me on that. And you can trade from options chains on Fidelity, so this will look more similar to Robinhood and what Robinhood does, although again this is going to be kind of the legacy look. So you type in your ticker, and here are you got the expiration dates at the top and right here. So this is what we were looking at. We're looking at Friday the 21st. You got calls on the left, puts on the right, and you can trade from there. So you can see the volume, open interest, bid ask. Like I said, it all looks complicated, but if you spend 5 minutes looking at it and have somewhat of an understanding on what trading options really means, which hopefully you do, it will make sense. And this is all the information you could need. You can see the deltas. I think there's a way to add more of the Greeks. I don't know. I'm sure there's a way if you are interested. Okay, I don't have any open positions or open contracts in my Fidelity account, but just to show you what closing a contract looks like. So here's a 3D Systems cash secured put that I sold. So again, I sold this to open. I received a credit at the onset, and so now I'm going to have to buy to close, do my one contract, and since I'm paying this out, it is going to be a debit to my account. So 5 cents. I know you've seen that sometimes, actually. Sometimes on Robinhood, it'll ask you if you're trying to do a debit or a credit. Okay, hopefully you guys understand what this means. But if you are receiving more premium than you are paying out, that is a credit. If you're paying out more than you're receiving, that is a debit. Okay, so again, buy to close. Since I sold this to open, minimum is 5 cents. I'm not actually going to do this because this contract is completely worthless, but this is what you would do. So I sold it to open at the onset. Now I'm going to buy it to close, paying out a debit, and that is what that would look like. Then I might as well go full circle since I'm already in Robinhood, and let's see what it looks like to sell options in Robinhood. So this is a very simple user interface. I do like it. It's always showing you the mid price, so you can see the bid and the ask here at 80 and 90 cents. So this is going to show the mid price, which is usually what I set my limit at. So that is easier than Fidelity, and I'm guessing the other kind of the legacy brokers. But anyway, you just switch over to sell, and then you're selling a call or you're selling a put. Robinhood has pretty good tech, so they know that if you're going to be selling a put, then you have the cash to secure it, or if you're going to be selling a call, it'll look in your account for collateral to use, either 100 shares or maybe another call that you were long already, so it's going to recognize that. So anyway, this is super straightforward. So let's say I want to sell that $25 strike for this Friday. I can take in 60 cents in premium. You can see it calls it a short put because I'm selling it. I'm writing a put contract. Minimum credit because I'm receiving more than I'm paying out. I'm just receiving the 60 cents. I'm not actually buying anything. And then it automatically sets it for the mid price. But like I said, I always put that in just to ensure that it's the limit. And I can hit review, and you can see the collateral would be $2,500 because I'm committing myself to buying 100 shares at $25 each if the buyer of this contract so chooses. So there's the collateral. Minimum credit is 60 cents. That's the premium I'm taking in. So that is the basics on how to sell options, buy to close, sell to open, all that good stuff. So if you guys have any questions, let me know down in the comments. Hopefully this was helpful, and I'll catch you guys in the next video.